Did you know that banks control over 90% of the Forex market? While retail traders struggle, banks make billions every single day. But what if I told you? You can trade like the banks too. Imagine waking up, grabbing your coffee, opening your laptop, and making money from anywhere in the world. Sounds like a dream, right? Well, thousands of traders are already doing this full-time, and today, I'm going to show you how you can do it too. On this episode we will cover the following sections. 1. How banks trade Forex. 2. How you can trade like banks. 3. How to make full-time income trading Forex. 4. How much you can make as full-time trader. 5. Best strategy for full-time trader. 6. Transitioning to full-time trading. And pro tip. Let's get started.
If you're new here, make sure to hit that subscribe button so you never miss expert insights that can boost your trading game.
How banks trade Forex and how you can too. Unlike retail traders, banks don't rely on basic indicators like RSI or MACD. Instead, they use three powerful tactics. Liquidity zones. Banks target areas where retail traders place stop losses, causing fake breakouts. Order flow. They enter the market with massive orders, shifting price in their favor. Smart money concepts, SMC. Banks manipulate price, triggering stop hunts before making their real move. Think about it, have you ever placed a trade, only to get stopped out before price suddenly reverses? That's because banks are grabbing your liquidity before taking price in their intended direction. But here's the good news, you can avoid this trap and trade like the banks too. Let me show you how to trade smarter and follow these strategies for more consistent profits. Now, let's talk about how you can trade like the banks. Here are three powerful strategies. 1. Trade smart money concepts, SMC. Identify order blocks. These are areas where banks place their positions. Wait for a liquidity grab. A fake breakout before the real move begins. 2. Follow institutional order flow. Track the commitment of traders' report to see where big players are positioning. Use volume analysis. High volume at key levels signals bank activity. 3. Trade during high liquidity sessions. Banks make their biggest moves during London and New York sessions. Trade during these times for the best opportunities. Avoid sideways markets where retail traders get trapped. By following these steps, you're no longer guessing, you're trading with smart money and making informed decisions based on what the banks are doing. So, what does it take to make a full-time income from Forex trading? It's not gambling, it's a skill-based business, just like being a surgeon or engineer. You need a solid strategy, capital, and the right mindset. Here's what you'll need. 1. A profitable trading strategy. You need a tested strategy with at least a 50 to 60% win rate and a strong risk-reward ratio. Smart money concepts, SMC, supply and demand, or institutional order flow are all great choices. The key is consistency. Don't jump from one strategy to another. 2. Risk management and capital. Never risk more than 1 or 2% per trade. To make a realistic full-time income, you'll need at least $5,000 to $10,000 capital. If not, consider prop firms. They fund traders once you pass their challenge. 3. The right mindset. Trading is 80% psychology, 20% strategy. Stay disciplined and treat Forex like a business, emotions are the enemy. Now, let's break down how much you can realistically make as a full-time trader. How much you can make as a full-time trader. Let's say you have $10,000 capital and risk 1% per trade, which is $100 per trade. If you win 60% of your trades with a 1:2 risk-reward ratio, you'll win $200 per trade and lose $100 on losses. After 100 trades, that's around $6,000 profit per month. If you trade a $100,000 funded prop firm account, your profits could be $10,000 to $20,000 per month while still risking just 1% per trade. This is why smart traders use leverage and prop firms to scale their income quickly. Best strategy for full-time traders. One of the best strategies for full-time traders is smart money concepts. SMC. Here's why it works. Step 1. Identify liquidity zones. Look for areas where retail traders have their stop losses. Step 2. Wait for a liquidity grab. Banks manipulate price before making their real move. Step 3. Enter at order blocks. These zones show where banks are placing their trades. Step 4. Ride the trend with risk reward. Always aim for at least a 2-1 profit target. Let me show you how this works with a real example on your USD. We spot a liquidity grab. And boom, we ride the trade up, making 3 times our risk. Transitioning to full-time trading. Going full-time doesn't mean quitting your job overnight. Here's how to transition safely. 1. Build a track record. Trade on a demo or small live account for at least 6 months. 2. Grow your capital. Save money or get funded by a prop firm. 3. Set a minimum income goal. Make sure you're consistently making 2 or 3 times your expenses before quitting your job. 4. Develop a daily routine. Full-time traders have a structured schedule: analysis, trading, and learning. Most full-time traders don't trade all day. They trade for a few hours during the London or New York session and then enjoy their freedom. Knowing the best times to trade can make a huge difference. Let's break down the 4 major Forex trading sessions and the best times to maximize your profits. Unlike the stock market, Forex runs 24 hours a day, 5 days a week. But it's not always the best time to trade. The market is divided into 4 major sessions based on global financial centers. Each session has its own characteristics, volatility, and best currency pairs to trade. Sydney session. First up, we have the Sydney session. This kicks off the trading week. The times are UTC, 10 p.m. to 7 a.m. EST, 5 p.m. to 2 a.m. During this session, trading is quieter, but it's great for Australian and New Zealand dollar pairs like AUD/USD and NZD/USD. Tokyo session. Next is the Tokyo session, which overlaps with Sydney and adds some volatility. The times are UTC, 12 a.m. to 9 a.m. EST, 7 p.m. to 4 a.m. This session is best for trading the Japanese yen, JPY, and Asian currency pairs. London session. Then comes the London session. One of the most active and volatile trading sessions. The times are UTC, 8 a.m. to 5 p.m. EST, 3 a.m. to 12 p.m. With high liquidity, this is the best time for major currency pairs like EUR USD, GBP USD, and USD JPY. New York session. Finally, we have the New York session. This is when the US market is awake, bringing in major price movements. The times are UTC, 1 p.m. to 10 p.m. EST, 8 a.m. to 5 p.m. This session is great for trading USD pairs due to high volume and volatility. But here's the secret: the best times to trade are when sessions overlap. This is when volatility and liquidity are at their highest. London and New York overlap. EST 8 a.m. to 12 p.m. Most active time with big price movements. Tokyo and London overlap. EST 3 a.m. to 4 a.m. Moderate volatility, but good for specific currency pairs. Now that you know exactly how banks trade and how you can go full-time in Forex, it's time to take action. If you found this video helpful, smash that like button, subscribe and hit the notification bell for more smart money trading strategies. Comment bank strategy if you want me to break down my personal trading setup. Let's build wealth together. See you in the next video.